You've been working for money your entire life, and your money has been doing absolutely nothing for you. Not because you're lazy, not because you don't earn enough, because nobody ever showed you how to flip the equation. Most finance channels will tell you to budget harder, cut your coffee, save more. That's not wrong, but it's incomplete. That's still you controlling money. That's not money working for you. In 8 years of personal finance, I tracked exactly what separated people who built real wealth from people who stayed stuck, and it came down to one shift, one decision. The people who made that shift, even starting with $100 a month, ended up in completely different financial lives within 5 years. Stay with me because what I'm about to show you changes everything. By the way, if you're new here, my name is Alex Carter. I've been working in personal finance for 8 years. In these 8 years, I've helped hundreds of people solve real money problems, and honestly, some of those people's lives completely changed because of it. On this channel, I help everyday people stop trading time for money and start building wealth that actually works for them. All right, let's get into it. My situation at 24 was this. I had a job paying $41,000 a year, 0 investments, 0 assets, and $100 left over at the end of every month after bills. And I remember thinking, if I just work harder, get promoted, earn more, eventually I'll get ahead. That thinking kept me broke for 2 more years. And here's the thing nobody tells you. Earning more money doesn't solve the problem if the system you're running is broken. I was earning more by 27. I was still living paycheck to paycheck. The average American works 40 hours a week, 50 weeks a year, for 40 years. And at the end of that, the median retirement savings is approximately $87,000. That's $87,000 for 40 years of work. Do the math on that. That is the result of money never working back. And here's the thing, most finance channels only show you the savings side. Spend less, save more. Here's a budget template. That's not the full picture. Because saving money and making money work for you are 2 completely different things. Saving keeps money static. Assets make money move, okay? Simple animation showing a person handing money to a bank versus money multiplying through investment growth. Here's where it gets interesting. There are 4 money engines, 4 specific ways that money generates more money without you physically trading time for it. And you don't need all 4. You need to start with 1. The first engine is index fund investing. This is the one that most people know about, but almost nobody actually starts. The S&P 500 has returned an average of approximately 10% annually over the last 50 years. That means $100 invested today becomes $110 next year without you doing a single thing. And it compounds, meaning next year you earn 10% on $110, not $100. Then 10% on $121, then on $133. The number keeps growing on itself. Most finance channels give you that stat and stop there. What they don't show you is what it actually looks like over time. $200 a month invested at 10% average annual return, starting at age 25. You know what that is at 65? $1.27 million. From $200 a month. That's 19 years of working a 9-to-5 job producing less retirement savings than $200 a month in an index fund for 40 years. The math is simple. People just don't want to sit with it, okay? Compound interest graph showing $200 per month growing to $1.27 million over 40 years at 10% return. The second engine is dividend income. When you own shares in certain companies, specifically dividend-paying stocks or ETFs, those companies pay you a portion of their profits just for holding the shares. You don't sell anything. You don't do anything. Money shows up in your account on a schedule. A $50,000 portfolio in a dividend ETF yielding 4% annually pays you $2,000 a year, $166 a month, passively. That's not retirement money yet, but that's the beginning of money working for you instead of the other way around. And that number grows as you add more, okay? The third engine is business systems, and this is the one nobody talks about clearly. A business system is not start a business and work 80 hours a week. That's just a different job. A business system is income that runs with or without your constant presence. Digital products, courses, automated services, things that sell while you sleep. I'm not saying quit your job tomorrow. I'm saying that if you can build even one income stream that generates $300 to $500 a month without your daily labor, you have started a money engine. And the fourth engine, real estate equity. A rental property where the tenant's monthly payment covers your mortgage and generates a net surplus is a money engine. You own the asset appreciates, someone else funds the mortgage. This one requires more capital to start, but it follows the same principle. The asset works. You don't. Okay? 4-panel graphic showing the 4 money engines: index funds, dividends, business systems, real estate, each with a simple visual representing passive income flow. Stick with me. This next part is where everything changes. Here's the part most people completely miss, and it's the reason 95% of people never actually start any of these engines. They wait until they have enough money to invest. There is no enough. There is only starting. The pay yourself first system is exactly what it sounds like, and it's the one financial habit that separates people who build wealth from people who don't. The moment your paycheck hits your account, before rent, before groceries, before anything, a fixed amount moves automatically to an investment account. Not what's left over at the end of the month, because there is never anything left over at the end of the month. Life always fills the space. You set the amount, you automate the transfer, you live on what remains. And here's the thing nobody tells you about this. The amount doesn't matter as much as the habit. $50 a month invested consistently at 10% for 30 years is $113,000. That's not financial independence, but that's $113,000 you built on autopilot while you were living your normal life, because you automated one decision and never had to think about it again. If your number is $100 a month, that's fine. Start there. If it's $50, start there. The compounding doesn't care how you feel about the number, it just runs. You have agency, more than you're willing to accept right now. The person earning $38,000 a year who invests $150 a month consistently is building more wealth than the person earning $90,000 who spends everything and waits until they have more room. The wealthy don't earn more and then start investing. They invest first and then live on what's left. That's the entire difference, okay? The investments, non-negotiable, with a recurring schedule visible. All right, so today we covered exactly how to make money work for you. The 4 money engines, how compound interest actually builds wealth over time, and the pay yourself first system you can start today with any income level. If this helped you even a little bit, hit that like button. It genuinely helps this channel reach more people who need this kind of content. Subscribe to the channel and make sure you hit the bell icon so you never miss a video like this. We drop new finance content every week, and trust me, you don't want to miss what's coming next. And if you want to go even deeper on exactly how to build your first index fund portfolio from scratch, I've linked a video right here. Go check that out next. I'll see you there. Have a prosperous day.